Good afternoon, everyone, and happy Friday. It's Alyssa Corum here and Ed Carson. Today, we are going to provide you some context and IBD's take on the market action this week, what you should be doing next week. We're also going to be taking a look at two stocks. We have Lennar as well as Epam Systems. And Ed, you're going to kick us off. We're going to take a look at a daily chart of the Nasdaq. But this week, definitely characterized by some bearish action, and we definitely didn't see any improvements in market conditions this week.
Yeah, the best you could say is that we sort of ended where we started, but it was sort of an ugly way of doing it. We started the week off very nicely. As you can see here, we came up on Monday and Tuesday, rebounded from the 50-day line, came up to this 21-day line. And then Wednesday afternoon, it looked like we might be ready to break out, and then we reversed lower after the Fed meeting, and it was a pretty rough time. It was a pretty rough time. We've broken well out of this regression channel that had been keeping the market rally. It's basically sort of a quasi-channel line. It's not a channel line. Best you could say is that we did close relatively well on Friday, closing in the upper half of the range, but we undercut just about everything for the Nasdaq and the S&P. Going back several weeks.
That's right. Well, we still had a decline of about 1.1% for the Nasdaq off of lows for the day, as you mentioned. So a little bit of relief in the back half of the session. But what do you make of the fact that we did undercut those recent lows intraday today?
Yeah, it was not good action. You definitely saw it. It was definitely weird because there were a lot of green today. I mean, Tesla had a great day. There was a lot of other stocks that had at least marginal gains or pretty solid gains. But a lot of big techs are losing ground. I mean, Apple, Microsoft, a lot of stocks that have been real big leaders, huge market caps that really struggled this week. Definitely a lot of pressure, but it's not giving up. The bulls aren't giving up. As we keep on Thursday and Friday, we sort of closed in the upper half of ranges. And so there is that positive, but definitely some weak action to a certain extent here.
And it's a reason to be defensive. Us looking at this weekly chart here, you can clearly see a continuation of that shift in tone. We had this really nice, long, steady, and steep uptrend that has now been broken for a couple of weeks, and that prompted us, even before the sharp declines, to get cautious, and that is what is warranted now for investors.
Yeah, we've been market under pressure for quite a while, and it's sort of like if you get underwater a bit and your head starts to hurt because you're too far down. Well, it's sort of like we've pushed us down a few more feet. There's more pressure. A few new buys have really worked. DraftKings, if you bought Tesla off the 50-day line, if that was a bold move, those have worked. But generally, new buys have struggled, and so that's just new buys have struggled. A lot of old leaders have sold off. So it's not necessarily an environment that's conducive to being heavily invested.
That's right. But also looking at this weekly chart, what can we glean from it? I mean, it would be great to see, as we've said, even earlier in the rally when we were just getting stunned week after week, essentially with strong gains, it would be nice to see the market trade sideways here for a little bit, digest those gains. So moving forward, is that what we would like to expect? Or like to see from here, not expect, but at least that would be the positive, since we did over the last couple of months run up so far so fast.
As Arusha Perez, Market Smith director, said today on IBD Live, in the short run, it would be nice to see the market at least retake the 50-day line, retake the 21-day line. So, you can still hold what you're invested in, but it might be better in the long run for the market rally to see a longer sideways action or even a sell-off, a real correction, so then new bases can form, excesses can get pushed out of the market. So, we don't know what's going to happen, but it's definitely a situation where it might be better off because there's not too many bases out there. I mean, we've had 3 down weeks. That's not the kind of situation that forms a lot of bases.
Yeah, that's right. But the silver lining is maybe there are some stocks in the early stages of forming bases. And we do want to pivot now to Market Smith so we can check in on a monthly chart of the Nasdaq. What is this saying to you, Ed?
Well, this is a monthly chart going back to, like if you see, this is a trend line that goes back basically to the beginning of the bull market in 2010. And as you can see throughout this entire time, we really didn't move above it. Sometimes we ran alongside it, sometimes we pulled back from it, but we didn't break above it. And this last couple of months, we had broken above it. So even now, we're just barely below it. So that's something, again, if we could run at this level, this pace was too fast. But if we could run at this level, that would be very good. There could be solid gains, and the market could keep going. You just can't run at full speed for that long. I mean, there's only so long you can sprint, and that's what we've been doing. So that's just something to keep in mind. That's another reason why maybe the market needed to take a rest. We were just getting, outside of speed limits, quite honestly.
Right. So this action doesn't mean that all is lost, all is not lost. So we'll just have to see what next week brings. But we do also want to add some perspective by looking at the S&P 500 via SPY, the S&P 500 ETF. Now, the S&P had been holding up better than the Nasdaq in terms of where it was trading in relation to its 50-day until today, unfortunately.
Yeah, this was a rough day for the spiders. The S&P 500 finally went through the 50-day line, undercut all this area, undercut this September 11th low, which sort of had been the low for the S&P and the Nasdaq. This one really came underneath it, and it's, I think, in some ways because the techs that sold off in the Nasdaq, those were the techs that are in the S&P. Apple and Amazon, Google, and those sorts didn't have as many of the winning techs that are in that index. So that's something else. It's showing that there's the pressure continues to increase, and it didn't come back as much as the Nasdaq did. So it's just something to be watching out for.
So with where we close, what would be the expectation for where we would be headed early next week, at least, to kind of just gauge those expectations?
We've broken through it. Now the question is, can you get back above it? So you might expect an attempt to get back above the 50-day line. So we'll see. But we'll have to see if that happens. There's going to be resistance, getting back above that. So that would be the situation. If we can get it back above that, that'd be nice. Getting it back above the 21-day line on the S&P and Nasdaq. But, we are spending some time below those levels, which is just not great. I mean, it's hard to make money when the market is below the 21-day line and especially the 50-day line.
That's right. Well, let's check in on some individual stocks because it's an important time to keep that watch list fresh. So we want to check in on Lennar, which is a standout. The housing sector has been strong, and relative strength here, definitely Lennar has that in spades.
Yeah, really great action. I mean, housing has done particularly well. Lennar seems to be one of the leaders right now in this area. Relative strength at a new high, as you say. They had earnings, and the stock didn't react well to it. Had a pretty nasty sell-off, and that was a day when the market was rallying. So that was ugly, but it bounced right back. That for whatever reason, it seemed like a decent report, but the market, it sold off. It came right back. It would be great if this could consolidate for a little while longer. And form a real base, because it's sort of tough. The market's in a tricky situation. It's like a 3 or 4 week consolidation, so it's not really ideal, but it's definitely been acting very well and one to be keeping an eye on.
That's for sure. And now let's check in with Epam Systems. It did log a little bit of a loss today. We're going to be looking at this one on some different time frames. What do you make of the action here? It is still holding around that 21-day.
Yeah, it's holding around there, which is pretty good. It's still well above the 50-day line. That's much better than a lot of the leading stocks, the Nasdaq, the S&P. RS line is basically at highs, and it's been a steady grower. This is a long-term leader, so tell me what you think about this long-term chart. Pretty good, I think.
Yes, that is a picture perfect long-term leader, you could almost say, with that relative strength line, just really showing the outperformance over the long term versus the S&P 500, which is what we really like to see, in addition to the steady fundamentals as well. That's the other key ingredient, the long-term track record of outperformance and really great track record of strong fundamentals as well.
Yeah, and you want to be looking right now, there may not be a lot of things in basis. Lennar sort of maybe in the early workings, but look for stocks with strong relative strength. The Lennar and Epam have that, because maybe the market will turn around quickly, but it may be weeks from now. And so, those buy points and setups may show up over time, depending how the market goes. But if you're looking at the stocks with strong relative strength, you're probably going to be finding the stocks that are leaders when the market really takes off again.
That's right. And we've looked at examples of this, stocks coming out of past corrections, showing that relative strength line at new highs as they're consolidating. Those are often the ones to make those big moves when market conditions improve. Okay, so now that we've looked at a couple of stocks, let's put everything together and really just circle back to what investors should be focusing on for the week ahead with the market conditions that we're seeing, and with, like you said, Ed, not a lot of recent breakouts really working.
Yeah, if you have, and if you've got one of those and it's got a decent gain, that's great. That's great. But a lot of new buys have not been working. And so it's just a time to be defensive. New buys aren't working. A lot of the leaders from the last rally are struggling. I mean, some are holding up, but a lot have really taken some serious hits, falling through the 50-day line, breaking maybe decisively through the 10-week. So, you want to be making a situation where you want to think, hey, do I want to get, cut maybe the new buys and maybe really reevaluate? It's another week. Some of those long-term, those stocks that you saw as long-term winners for you, do you see that still, or do you cut them back? Or do you sell them entirely, or do you say, no, I'm going to sell these other stocks, but these stocks I'm going to hold?
Yeah, that's right. So grading your stocks, making sure you are following those sell rules, staying engaged with the market as well is very important, because we don't want to just assume that we will see a quick rebound from here. And just like we don't want to assume that we're going to see further weakness. You have to stay nimble, stay flexible, and really keep a pulse on what the market is doing. And that's what we do every morning on IBD Live in great detail, in addition to our Stock Market Today show, Ed.
Yeah, and that's where we're focusing entirely. We're focusing on the stock market. We're focusing on the actionable stocks, or the stocks that are really making important moves, that the growth investors are interested in. So we're trying to help you build that watch list, and build that watch list really widely. It may not just be the tech stocks, a lot of transports, a lot of housing stocks, a lot of stocks out there. Look for the quality stocks with high relative strength, and that's what we're trying to do on the market. We on IBD Live every morning.
That's right. And we'll be sure to update the audience when we do get an official change in market conditions, either which way. And if you're a subscriber to IBD Digital, you will get that in our big picture article every day. We always update our market outlook and our market pulse as needed, depending on what we're seeing with the overall market conditions. And all of these charts that we've been showing you with the white background, those are our MarketSmith charts. And we're coming up on the tail end of the MarketSmith free access week. So we hope you've been checking that out. But if you haven't, you still have a little bit of time to do so. And we hope that you check out all the features, especially right now is a good time to be building that watch list, checking out that RS blue dot list. So lots of helpful tools, including that one. There you go, Ed, demoing it here for everybody. So it's a good time this weekend to do some research, build your watch list, and check out MarketSmith, going to investors.com/MS free access if you haven't already, Ed.
That's right. And it's what we do every day. We're using it constantly. I don't know what I'd do without it. So definitely take advantage of it.
That's right. All right, everyone. Thank you so much for tuning in and checking out our in-depth Friday market analysis. And we will see you on Monday.